Silver and gold are just moonshotting right now. There's no other way to say it. Look at gold, new all-time high, 46.25 an ounce, and take a look at silver, back to the all-time highs, $85.40 per ounce. This is crazy. And I could think of no better meme than what I saw on x.com or Twitter today. Let's take a look at this very important update. There's no way silver can keep running. And it's a picture of David Goggins running. This dude, if you don't know who he is, he runs like 100-mile races and he's insane. But I just thought it was a really funny meme. And with that said, let's talk about whether or not this truly is going to keep running or if we're getting close to the end on precious metals. Well, what caused precious metals to jolt higher again today? Well, it was news that the Trump team is escalating their attack on Fed's Powell with criminal indictment threats. Although Trump is denying involvement in the DOJ's Fed subpoena, I don't know anything about it. And if I was to try and summarize why this is so bullish for precious metals, is that the Federal Reserve is meant to be sort of this third party on paper. I know there's people who are going to shrug or roll their eyes at this, but on paper, the idea of the Federal Reserve is to have a third party unbiased view of the economy and to moderate what happens with interest rates and quantitative easing and tightening to try and keep stability within the economy. Now, I know some people think that they're politically motivated, etc., but that's the point of the Federal Reserve. And it seems like the bond market is really not liking the idea that if the president is able to kick out Fed officials that he doesn't like and put in ones that he does like that will cut interest rates the way he wants, that it sort of downplays the importance or independence of the Federal Reserve, who is supposed to act independently from Congress or from the president and supposed to take a hard look at the economic data and have no sort of predispositions or political agendas behind their decision as to what to do with interest rates overall. And we actually see bond yields moving higher in response to this. So despite the Fed cutting interest rates and expected to continue to cut interest rates, what we can see when we take a look at a weekly time frame on the US 10-year government bond yield, they are mostly unchanged. Despite the come down in inflation, what this is telling you is that the bond market is still worried about lending money to the US government and is demanding a premium, a higher coupon rate or interest rate in order to lend money to the US government. Why would that might be? Well, it might be that people are mistrusting the US government, thinking that, hey, they're just going to spend frivolously. And if they can just kick out Fed officials whenever they want and put in somebody who's going to let them lower borrowing rates really aggressively and spend a bunch of money, then bond investors are not dumb. They're saying, well, if you're going to put in someone who is going to cut interest rates dramatically, despite whether it's right or wrong through economic data, and someone instead who's just going to kind of bow down to the current president, then the bond market is going to rebel and actually keep interest rates higher. Remember that the Federal Reserve controls the short end of the borrowing rate, the overnight rate, the Fed funds target. They don't control the long-term borrowing rates like mortgage rates and long-term business loans. Those are set by banks in the market, right? So at the end of the day, the Federal Reserve does have a lot of power in the short end, but long-term borrowing rates are set by the market. And if they disagree with what the Fed is doing or what the president is doing, then they can revolt and the bond vigilantes can kind of go against what the Fed is doing. I know that was some high-level stuff, and if you like the bond market commentary, then let me know. Comment down below and hit the thumbs up button on the video. It really helps me to know that that sort of topic is aligning. But I think that's also why, guys, that gold and silver are erupting higher again. You have to understand something. If the bond market is revolting and there's mistrust in governments and we see a labor market that's cooling and central banks cutting interest rates globally, this is painting an incredibly bullish story for gold and silver, as people seem to be rushing away from the US dollar and instead parking reserve funds in gold and silver. In fact, we have seen over the last few years tons of money from central banks pouring into precious metals instead of the US dollar. Of course, when people are buying the US dollar, what they're really buying on a broad scale is US Treasuries. So less demand for US Treasuries is also why yields go up. Remember, Bonds, when you are talking about bonds, the bond price going down means the yield goes up. So right now we're seeing a lack of demand for US bonds, probably because people are worried about inflation and the stability of the overall financial system in America. Now that was some very high level stuff. So like I said, hit the thumbs up button if you like that sort of thing. It's hard for me to gauge just from, doing my videos. I try and gauge what people like to see more of. And if you like the bond market commentary, although it is definitely higher level stuff and even definitely challenges my understanding of markets, I have to constantly be learning more. I'll do my best to share it with you if that's what you want more of on my channel. Anyways, gold and silver, I remain bullish on, and it's also backed by the macro right now. Let me show you. So check out this new page we've been working on. It's the, we're calling it the asset scorecard, but I'll talk to you about this in a second. I'm coming up with a naming for this. Anyways, Edgefinder's getting a bullish reading for gold, and we can see a little bit of a breakdown. What's giving us that bullish score? Well, it's fundamental economic data, it's technicals looking bullish, and sentiment is working a little bit against us. More on that in just a second. But the overall score is giving us a bullish reading, and what we can see here when we look at some of our overall financial metrics, or economic metrics, I should say, is inflation is giving us the green light. And what I mean by that is CPI coming in better than expected, PCE coming in better than expected. This is giving us a little bit of reprieve on the idea that the Federal Reserve can cut interest rates, even though they probably are not going to do it at the same pace as the Trump administration would like per se. They are still expected to cut interest rates in 2026. And I also just want to make a quick pause. This is not pro-Trump or anti-Trump or pro-whatever. I'm not trying to be political by sharing this. I'm just trying to share you how this impacts the markets. In fact, I think the Fed independence is important, not from a I don't like Trump perspective, but from any political president. I think the Fed should be independent. Just to voice my opinion on this, usually that's pretty bipartisan, as the Fed should be really in a pure system, should be acting independent from the president, from Congress, etc., and just looking at what we're looking at here to make a decision as to whether or not they should cut interest rates, hold them, etc., not necessarily just kind of adhering to the current agenda of the standing president, because it could change the next president that comes along. And I would say the exact same thing if there was a Democrat in the White House right now. It's not a political statement in my, opinion. I think that I guess it is a political statement. I think it's better for the Fed to be independent and to not be kind of under the control of the standing president, Republican or Democrat. So anyways, the overall reading here for gold is giving us a bullish +5 signal. And we can actually see with this new Edgefinder score over time tab here, you can see that Edgefinder has been bullish for gold. And what I like to see here is that we had a very narrow dip here in score, but have mostly stayed pretty confidently bullish on Edgefinder reading for the last few weeks and even last few months. Switching over to silver, you can actually see it has an even higher score, overall getting a +8, with sentiment actually giving us some positive scoring here. Again, you can see Edgefinder's score over time for silver has been really strong. Inflation is giving us the green light. Institutional activity shows institutional buying in the latest reported COT report, and technicals are very clearly bullish, breaking to new all-time highs and backed by seasonal trends right now that looked very good for silver. Anyways, I need your help on this for a second. What do you think is the better name for this new tab? We're trying to think of the right name for it. Let me give you some options, and if you could comment down below which one you think sounds better, it would really help me out and I greatly appreciate it. Okay, so which one sounds better for this new tab? Asset scorecard or symbol scorecard? Please do me a favor if you want to help us out on this vote. Just comment it down below and I'll keep an eye in the comment section and see what you guys have to say. Which sounds better, asset scorecard or symbol scorecard? And obviously, if you're an Edgefinder user, this is your chance to voice your opinion on this, because again, it's hopefully going to be a one-stop shop for you to get an overview of how the Edgefinder is scoring each of the different assets that you may be interested in, or symbols, depending on which one you think sounds better. By the way, we're giving away a free copy of the Edgefinder inside of our Telegram channel. If you're not already in there, simply join using the link in the description down below this video, hit the pinned message, and just fill out that form really quick to enter your name for a chance to win a free copy of Edgefinder at the end of this week. We'll be doing that on Friday, so stay tuned for a chance to win a copy of Edgefinder if you join us in there. And if it's easier to join the Telegram through a QR code, simply scan it with your phone right now if you're watching on a TV or your computer or something. That way you can join using the app. It'll take you like 2 seconds. So gold and silver breaking to new highs has not been a new theme. In fact, we've put in like hundreds of new all-time highs in the last few years. And so the question starts to become, do we tend to see new all-time highs after breaking all-time highs? Well, if anything, history in the last few years has told you yes. Interestingly, new all-time highs have actually been a really bullish indicator. Let me show you a really simple comparison. If we take a look at the RSI over time, I mean, look at this in the last few years. For the most part, when you have had a quote unquote overbought reading, it's actually been a better time to buy gold than to sell gold. I think it's also fair to mention that this won't go on forever. You won't have an upward trend like this that lasts into continuum when it comes to gold. But for now, the trend is really, really strong. And amazingly, I've been saying that for like, not even kidding, like 2 years now. Like I've been saying, the editor's probably getting tired of me saying this, but it's like genuinely overbought readings have been bullish signals on gold. And I can't tell you how many times I've had commenters in my comment section saying, this time is it, it's gonna top out. I mean, I sound like a broken record. I've literally talked about this topic like 4,700 different times. And yet people still step up and try and short gold every single day. Now, again, I'm not saying that that will never work, that shorting gold is never a good idea. It's just, I think it's a really hard trade when the thing is grinding higher and breaking out and technicals just look bullish. Price action here continues to support, in my view, higher highs and higher lows until something changes. In my opinion, it's better to be following what price is doing rather than trying to disagree with it and trying to short something that just keeps going up. Especially when we look at the precious metals and have bullish readings from Edgefinder, which is telling us that fundamentals are generally supportive of higher prices. Moving on from precious metals, let's take a look at some of our most bullish and bearish readings currently within the Edgefinder. You can see we have things like Euro Swiss, Kiwi dollar, Kiwi Swiss, Aussie dollar, Euro pound, Euro CAD. We have a good bit of setups here forming within Edgefinder. Now I'm already long NZD USD. Let's take a look at that chart. So I entered this trade, well, I guess about a week and a half ago or 2 weeks ago, right around this area, and price did initially move in my favor, but nearly stopped me out. Though we did hold this area of support around the 57.20 level, have found buyers, and I'm back in the green on this trade for now. With my overall idea being, let's see if we can get a break to new highs here, but really I'd be looking to take some profits off if we can get here. I already took some profits off this position. I actually took 2 initial openings on this trade and closed out one here, with my second target being up around 58.55. Today's video is sponsored by Black Bull Markets. Black Bull is a New Zealand FMA regulated broker offering Forex, metals, and crypto trading to their users. With access to over 26,000 tradable instruments, everything from gold, commodities, indices, and more, through their CFD platform, you can trade pretty much anything. They're also backed by one of New Zealand's largest investment management firms and provide institutional grade trading conditions. Black Bull Markets has also earned multiple industry awards for their fast execution speeds and their leverage trading opportunities on their platforms. Traders can access up to 1 to 500 leverage and choose from several platforms like MT4, MT5, CTrader, and TradingView. And something super cool is that they offer no commission on crypto trading, as well as highly competitive spreads, especially on Ethereum. And for a limited time, active traders can receive free TradingView Premium and up to $60 reimbursed every month just for trading with Black Bull. And if you're interested in copy trading, they have an expansive platform just for that. You can see real trading results from other traders in a live environment through their copy trading platform. And when it comes to choosing a great brokerage, choosing one with competitive trading costs in the form of spreads and commissions is very, very important. With their ECN Prime option, you can see spreads from 0.1 pips, which is pretty crazy. And of course, if you're a larger trader, this institutional package looks incredibly competitive, with spreads from 0 pips as well as a $4 round turn commission. Of course, there is a minimum deposit on this, but all 3 of these look highly competitive compared to the industry. Make sure to use the link in the description down below. We'll leave all the information you need to start trading with Black Bull and start taking your trading to the next level with their amazing platform, their competitive spreads, as well as their copy trading platform if that's something that you're interested in as well. So like I said, make sure to use the link in the description down below to support my channel and also to check out Black Bull to see if it's a right fit for you. Now back to the video. Let's also take a look at the AUD/USD, or the Australian dollar versus US dollar. This currency pair actually, in my view, looks better than the Kiwi dollar. A really nice support was found here right around the 66.70 level, and price has put in what looks to be a little bit of a engulfing candle here this morning, trying to push back towards those highs. Would not be surprised if we continue to see the Australian dollar outperform here to the upside. Another one that's been on my watch list is the Chinese stocks, actually. Let's take a look at those and just look at the momentum to the upside here. I actually think that, well, this is probably why these things are up today. A lot of international stocks are up when US stocks are flat to down today, probably because basically the US is doing all their thing with the Federal Reserve, and Trump and Powell are back at it again here, it looks like, or at least that's the perception, even though Trump denies involvement in it. The point is, there's turmoil amongst government in the US, and perhaps that uncertainty is driving investors to move to other places like Chinese stocks, Japanese stocks, UK stocks, German stocks, etc. In fact, this is a really key level that I think is interesting and worth watching. This Chinese stock market has been consolidating here for a little bit, and one ETF that I like to watch is FXI and also KWEB. This is FXI, this is Chinese large cap ETF overall. If we take a look at like a weekly time frame, you can see we've been kind of consolidating here recently. And if we take a look at KWEB, this is Chinese internet stocks. These have been kind of beaten down here recently, but perhaps we're starting to see a little bit of a momentum break to the upside in Chinese stocks. And a clear break is happening when we take a look at the Nikkei. Check this out. Japanese stocks were able to put in a new all-time high today, and I do think that there is some supportive price action here coming in due to uncertainties in the US. Momentum looks really strong for this one, and I would be interested to see what Edgefinder says about Nikkei right now. Overall, you can see we're getting a neutral reading for the Nikkei at this time. Institutional activity being bullish, economic growth being neutral, technical bias is a little bit neutral, although today's breakout will probably change this to bullish shortly. And inflation reads are bullish. So honestly, if we were to get a pullback in the Nikkei, there is a good chance that this starts to become a bullish setup for me. One ETF that I like to watch is the EWJ, which is a Japanese ETF. Another market that seems to be trying to turn around right now is oil, although oil also getting a neutral reading within Edgefinder. Technicals starting to turn bullish. Economic growth and institutional activity, however, kind of in neutral territory, and inflation looking a little bit lackluster and bearish. Specifically, the rise in the 2-year yield here recently is a little bit not so great for oil price. Remember, falling yields, falling interest rates, etc. The idea is that supports economic activity, buoys the demand for oil. Jobs market data also neutral. Another one that I'm watching is copper. And again, it is the rise in yields right now that's making me a little bit cautious when it comes to the inflation bias for this one. We did get a PCE number, a CPI number that was pretty good for commodities, but this concern in terms of the 2-year yield rising is something that I think is worth paying attention to. So let's keep an eye on what happens with yields. If this thing is to roll over, that would be good for commodities, and I think is a big player here. For example, if the 2-year yield were to roll over from here, it would actually potentially swing me more bullish on things like copper, things like oil, etc. Taking a look at some institutional activity, we can look at the latest commitment of traders report. Remember that we are looking at the non-commercials, as these are your hedge funds and banks. They added long positioning to things like the Dow Jones, the Kiwi dollar, the Swiss franc, and the Nasdaq, as well as the Nikkei, and sold things like the Japanese yen, US oil, SPX, gold, and copper. However, keep your eye on overall longer term positioning to get an idea of where they are parked in the longer run. It looks like they're still long gold, silver, copper, the Nikkei, and the euro. Selling things like Swiss franc, Kiwi dollar, US treasuries, CAD, and S&P 500. I also thought this was worth mentioning. The S&P 500 put call ratio shows a big surge in call volume when we hit all-time highs on Friday. Meanwhile, if we change over to gold, GLD shares also saw a big surge in call volume on a relative basis on Friday. So kind of interesting to see crowd sentiment. Got it right, it seems like, on gold, while stocks may have been a little bit euphoric right at the top. Taking a look at silver, very similar. You can see crowd sentiment is looking a little bit bullish. So when it comes to precious metals, I'm not a big fan of adding longs right here at the top. But if you were to get a pullback and maybe a little bit of a spike in put volume, that to me would be a sweet spot for either adding to my existing position or building a new one. Japanese bond yields continue in their positive direction here to the upside, continuing to be a story playing out in the background that I do think is worth watching. Rising yields, I also think, have a very negative effect when it comes to Bitcoin, which so far this year is pretty much flat to sideways. And I continue to sort of overall posture myself as bullish commodities for the most part, and bullish on the rotation trade within the US. Dividend companies and things like the Russell, things that would benefit from lower interest rates and wouldn't get killed in a sort of slowing economy a little bit here. That's kind of where I'm positioned. I think that just being super long technology might not work as well this year as it has in previous years. Obviously, being just long NASDAQ in the last few years has been the winning trade. And, for now, I think NAS is kind of consolidating. Meanwhile, we're seeing some really constructive price action in things like the Russell, which I'm still long and trailing stops on, and international stocks. Like I said, take a look at the Nikkei, look at Chinese stocks. I like the momentum here that I'm seeing in other places and in the precious metals, and we'll trade those actively for now.
Hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.